This week, we're talking about Russian wheat expectations, some corn yield potential, and then maybe into some Federal Reserve discussion on interest rates. Hello and welcome. I'm Brownfield's Will Robinson with a weekly commodity market update, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
Oh, I'm doing well. How are you today, Will?
I'm doing pretty good myself. Enjoyed a nice 3-day weekend, a little bit of a break in the action for the markets yesterday, but some interesting topics we're going to cover today coming out of that extended holiday break.
Yeah, Memorial Day is just a great holiday. It's one of my favorite holidays. I think it kind of flies under the radar for a lot of people. But for my hometown, it's our alumni high school reunion weekend, so everybody's in town for that, and we always get together as a family and have lunch and go around to the different cemeteries. So, kind of an underrated holiday, maybe in my opinion, because I certainly do enjoy it.
Well, definitely a holiday that's set up for appreciation. So maybe one that well, it still carries a lot of weight and has a good meaning to it. So I think
That's
all in
right.
all, a great
Yeah.
holiday weekend. Jumping on to the markets here, some changes that we did see. We saw some increases across the board, some lighter increases, and then one major increase that we're going to touch on. So looking at corn first for that July contract up 4 cents at 464. That December 24 corn contract up 4 cents at 488. Soybeans for July were about flat at 1248. November soybeans were up 3 cents at 1219. Soybean oil on a cents per pound basis were down 1.37 cents at 44.95. Soybean meal by the short ton for July up all the way up to up 1240 at 386.50. The July wheat crop up 9 cents at 697. That 2025 July wheat crop down 1 cent at 744. And then that West Texas Intermediate crude oil contract down $1.06 per barrel at 78.24. And this is as of the Monday afternoon markets here. Ben, give me your take just on coming out of the holiday weekend.
Yeah, well, I'm going to correct you just real quick.
Yeah,
I
sorry,
should
out of
that
the Tuesday open. Yep.
yeah, Tuesday open. Given the holiday, we're actually getting a couple extra hours in our weekly change this week. So, um, I think to me, a couple of things stand out. One, we continue to see that soybean meal contract just kind of sneakily move higher. Some of the stress that we've seen in Argentina and really southern Brazil, and the demand for soybean meal out of that just whole region there, maybe presenting a little bit of an opportunity for U.S. soybean meal products to enter into some external international markets. Plus, we've seen the reduction in crush, the monthly reduction in soybean crush here, and that's kind of helped move that market sneakily higher. We're getting closer to $400 again. So that, and then as you noted, some spread action in those wheat markets between the July 24 wheat crop and the July 25 wheat crop numbers there, and a good chunk of that's related to Russia wheat production expectations.
Well, Ben, right there is where we're really going to start the bulk of today's episode, looking at some adjustments that we have seen from Russia out of the ICAR. I guess really Russia's kind of equivalent of USDA putting out estimates, updating their production estimates, dropping nearly 2.5% to 81.5 million metric tons. Just for comparison, USDA had their number at 88 million metric tons, so a few million of a gap there, and then ICAR also drops their wheat export expectation to 44 million metric tons as opposed to USDA's estimate for Russia at 52 million metric tons. So an 8 million metric ton gap there. So Ben, just kind of kicking things off, looking at the wheat market, what kind of pressure do you think this is going to add into the U.S. market moving forward for the potential of maybe some more export opportunity?
Yeah, so we have seen those production estimates decline. I think we're still trying to figure out exactly what all this means for Ukraine and Russia's production. It started off with drought, and then we had a late freeze. It's estimated that that could have impacted anywhere between 1.5 to 2 million hectares of the crop from that late freeze. So I sit here and I say, we're starting to get these kind of localized or mixed reports come in about the production potential, but generally everybody has constantly been moving those estimates down. USDA tends to be a little bit reserved, I think, in some of these production revisions to the lower side because they don't like coming back in and moving them back higher. We've seen this with South America time and time again. Same type of principle kind of applies in the Black Sea region. I do think we're getting really close to a philosophical kind of bench, if you will, or support level in the market. When Ukraine and Russia's total combined production gets down close to that 100 million metric ton mark, people start to get a little nervous. You start to hear reports about, export restrictions and food price spikes. We're getting really close to that 100 million metric ton mark between the two countries. So if we continue to see revisions lower, I think we'll start hearing more and more chatter about maybe some export restrictions, and then it'll determine, or then the next piece to kind of be watching for is, does some of that business come back to the U.S. market? We haven't really seen a whole lot of that business come to the U.S. market, other than we did see a flash sale, or well, I shouldn't say flash sales. We did see some new crop wheat sales across pretty much all the classes last week. And that was kind of really our first indication that we could be picking up some export demand.
Well, Ben, I feel like generally our conversations of the last several weeks, if not months, around I guess overall U.S. exports has been on the gap between the U.S. market and our competitors here. But on this end, the supply side is maybe pushing that market to meet the U.S. market. And just for a little bit of an idea of how big of a deal this is, looking kind of at that breadbasket of the world, Russia accounts for nearly a quarter, if I'm not mistaken, a quarter of global wheat exports. So definitely something to pay attention to. Moving forward here, looking domestic, looking locally throughout the U.S., we're still running through planting, and we're still seeing some tricky planting conditions in certain parts of the U.S. Looking, into maybe Illinois and over into Missouri and some other areas, we're still seeing a lot of rainfall and maybe playing out of some wet conditions further east of there. So, Ben, when we're looking at crops like corn, what types of yield potentials are you looking at early on this season as we see some of these challenges maybe with planting?
Well, last week, so I guess not the most recent week of data, because we planted, or we've had some areas being able to plant a little bit over the last week, but last Monday when we got the updated crop conditions ratings and progress, we saw a pretty decent week of planting progress, and that helped kind of fill that gap of late planted corn, or shrink that gap of the percentage of the corn crop that was planted late. At this point, everybody starts to think about, okay, well, what is our new maximum national average yield, and what could that be? And we've got a long growing season ahead of us, and certainly people are still planting, and the crops are kind of just now, maybe in some cases, or in the areas where they were able to get planted, the corn is just now hitting some of that nitrogen that's in the ground. So we got a long ways to go, and there's a lot of factors that are going to impact national average corn yield. But I will remind folks that there's things along the way that we can look at and say, okay, does that limit some of our corn potential? And I do think we have seen a little bit of that come down. So I wouldn't be surprised that as we move through the growing season, we start talking about a 179 national average corn yield versus a 181 national average corn yield. I do think that we've taken a bushel and a half to maybe 2 bushels off of maybe that ceiling of the corn crop. Still possible to produce a very large crop, even at 179 bushels the acre. That would be a new national average yield record. But I do think we have taken some of that off, and it's going to be, we don't talk about this enough, but when you have corn kind of emerging at different stages, whether that's because it was replanted due to flooding, or because there was heavy rainstorm that crusted over the soil and we just didn't get good emergence. Managing corn at different growth stages is a challenge, and that becomes a yield limiting factor too as we look ahead. So still the potential for a record national average corn crop, but maybe not as rosy as what I would have or what we would have thought 5 months ago, 4 months ago.
Well, and I think that's just kind of how the conversation's, clicking in right now. So really, as we're looking at some of these limiting factors, we can talk about maybe adjustments to the potential maximum output we might see, but it's still hard to pinpoint, where that floor is and where or that middle range might come into play. Ben, as you kind of alluded to, it's a long growing season and a lot has to happen between now and harvest. So I guess just in the near term, I guess ahead of USDA's updated numbers coming out this afternoon, probably around the time this report gets released, do you have any, I guess, expectations for the short term on what we might be seeing out of planting estimates?
So I don't think we got a whole lot planted last week across the country. I think there was some pretty widespread rains, and especially towards the back end of the week. I don't think we got a whole lot of planted. I wouldn't be surprised today to see, some moderate gains in planting progress. Maybe taking from 70% of the corn planted up somewhere in the upper 70s, maybe getting close to 80. But I don't think we got a whole lot planted lately or last week, and certainly we got some widespread rains on the back end that's going to slow some planting progress in certain places. I did drive across the Corn Belt from Missouri to Ohio last week. There are certain places where the corn, you can tell it's been planted, but it hasn't necessarily emerged yet. Southern Illinois being an area kind of eastern Indiana. No, I had it right the first time. Western Indiana. Those are areas where it does look like, the corn is not near as far along. It has been planted, or, they've still got some fields to plant. But then Eastern Indiana, calf high corn already. Western Ohio, a little bit behind, kind of similar to Illinois. So pretty variable across the Corn Belt. But I don't think we got a whole lot planted last week, but maybe.
Well, then, Ben, just touching base on one little excerpt that you wrote about here, talking about maybe some potential down the line on the macroeconomic kind of outlook on interest rates, some potential maybe for not only a lack of a drop in interest rates, but maybe another interest rate hike coming out of the most recent Federal Open Market Committee meeting. Just what's the potential for maybe an interest hike instead of a drop sometime this year?
So we did get the minutes of the Federal Reserve's April-May meeting. It was branded 2 days, but 2 months really, because it was the last April, first day of May. And I don't think we got anything shocking. I don't think we got anything that really changed the sentiment about interest rates. The Federal Reserve did signal an interest that, if conditions warranted, that hikes may be possible. That's some language that we've heard in the past, especially when interest rates were hiking. That was when we saw interest rates increasing, that was kind of the Federal Reserve's party line statement of, they will react to market data, and if market conditions persist, interest rates would hike. And so that was kind of the party line statement. I don't think this really changes anything other than it probably does take some of the steam, or at least some of the dove expectations that we'd see, interest rate decreases. I certainly think it's still possible to see an interest rate decrease this year. If the economy really starts to slow down here over the summer months, and we don't see some of this big driving season and people traveling. However, I heard, back to our Memorial Day comments on the radio coming in last night, I heard that Friday's air flights broke an all-time single-day record for air traffic travel, beating the Friday after Thanksgiving a couple of years ago. So people seem to be traveling. We still continue to be consuming, and the economy continues to still be rolling. So I continue to remain in this camp that I don't think we'll see interest rate cuts this year. We could see them in 2025. But certainly the Federal Reserve at least left the door open that if inflation starts to pop back up, we could see hikes again.
It's basically the equivalent to me of them saying, looking at maybe a crop market analogy, if there's drought, then production will drop. It's like, of course. Thank you. Yeah. All right,
So
man.
this Fed has done a lot of work signaling, at least messaging. And so they haven't done anything that they haven't previously foreshadowed. And so I would put this in the camp of it's a possibility, and they've now opened the door. And so if it did happen, they can point and say, well, we did prepare you. But again, I remain kind of in this position that we see no changes through the rest of the year.
Well, and speaking of wacky weather, I'm sitting here in East Texas, and just like that, it got dark on me. So the sun just went away, and now it's windy outside. So we'll see what's about to happen here. But Ben, for the rest of this week, on this holiday shortened week, what should farmers and ranchers be paying attention to that could move the markets?
Yeah, so it is a shortened week, given the holiday on Monday. We do have a couple of things that I think are, of interest on Monday, given that it's the first, business trading day of June. Next Monday is kind of a big day where we get an update about fats and oils crushing and how much oil production from canola and soybeans comes out, grain crushing. So we get an updated look at some of those crush margins for ethanol production. So kind of a big day on June 3rd. And also it's not going to be that long before we start really getting concerned about late plantings of both corn and soybeans.
Ben, as I was saying, thank you for your knowledge and input as always on the program. Viewers and listeners, if you'd like to learn more about us and what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.